Hi, Warriors. Who's ready for the Consumer Pain Index? You guys ready? Hello, Steve, Mike, Ingmar. Celios is here today. Hi, Ryan, Ran. Hi, Parth, Hugo, Glenn, Will. Everyone's ready. Nuno, how are you? Laura, Hannah. Okay, so get ready to throw your charts away for 10 minutes. I'm kidding. You should know what you're going to do before the number. You have your zones ready to react to the reaction, right? Okay. The one Stel's here, so go ahead, buddy. Here, I'll
Okay,
give you the screen.
sure thing. 1 second. And before I go into markets, I want to say something about price action because I was talking with a couple of friends of mine about silver actually, because they know that this is the one thing that I look at more than anything else. And I've watched a lot of price action over the years. I've been trading for almost 30 years. My first professional job on a trading desk was in late 2001. So I've been around and I've seen lots of price action. And sometimes, when was it, a week ago when I was saying, I feel that this rally is done, and I feel a bit worried, and I got out of all my positions. This kind of gut feeling that you get is it's experience. I think it's not because you've seen something that you don't maybe not remember where you've seen it, but you've seen it before many times, and this is something that we're seeing now. And for silver, in silver, for example, I have people saying, but it's dropped 10% from the highs and this and that, and I'm going to start buying. And everything tells me that this is, look, I mean, we've retraced to the 23.6 of this big move from April. And it's natural for people to look at support here, but the way this thing just went ballistic over 2 or 3 months tells me that the retracement is going to be deeper. And the more people try to catch this falling knife, I think, at least in the short term, the more this will go lower. And you have these two big red candles, one right at the top, and then another on the 21st, which was Tuesday. And people are screaming manipulation, manipulation. The usual suspects who are uber bulls of metals, and it's not. It is, as I wrote on the chat room a couple of days ago or yesterday, I can't remember. This is just the fact that everybody's on the same side of the boat, and you have people getting out now. People who bought above 50 on the breakout. I mean, how are they feeling now? They're going to be very worried if they haven't stopped out already. They will be stopping out soon. So you see this price action, and you have to sit back and think, what is driving this? It's human psychology, right? Everything is human psychology. Yes, there's a lot of machines trading at the moment, but it's all driven by human psychology. So I think that for silver, for example, we are kind of testing the 23.6. I think we're going to the next level, which is 44.5. And the next level, again, you're going to see buyers. And I think that, obviously, a lot of things could happen from now until then. But if things progress as I expect they will, we will most likely continue lower. And then we get to points where it gets really interesting in terms of value. So 41 to 42 is my area of interest. And we're not there. And also, think about this. Metals have corrected quite violently while equities are still doing well. What happens if we get risk off? If we get risk off, yes, you could argue that gold usually kind of sees some support because it's a flight to safety, but even gold didn't manage to rally when you get proper risk off like 2008 or even COVID in the beginning. It did pull back, but you have metals like silver and platinum, which are they move quite violently when we get risk off. So you've got silver, which is corrected 10% without equities moving lower. In fact, they've been kind of grinding higher. So I would be very, very careful being long silver and platinum and the other metals and gold as well. So just something to think about in terms of price action, and you see something happening, just try to think about what's driving it. What happens if you're on the other side of this trade? If you're, I'm at the moment, I think we're going lower. What have I put myself in the situation of people who are long. What would I feel like if I was long here, from 50 or 52? I would be very worried. I would actually be stopping out already, but you know what I mean. So just a general thing to say before we look at charts, simply because I was talking about this exact same thing with some friends about an hour ago.
Well,
Anyway, so
you could have boiled it down into a few sentences, Parabolic moves end badly. And
yeah, yeah,
this was a parabola.
yes. And don't get me wrong, I think we're going to break above 54 eventually and go to wherever. But a big healthy correction is underway, and I think it's going to continue. Of course, I could be wrong. I've been wrong many times, but my experience tells me this. So I wouldn't be, rushing in to buy this dip because I think it is going to be going lower.
Would you
So
short it? Would you short it?
yeah, I hate shorting metals. I really do. So well, if you tell me to trade this, I would short it. Crazily enough, right? You never probably thought you'd never hear me say this about silver, but price action is telling me this. And if you go to a lower time frame, like the 4 hour, I mean, this looks like a really nice bearish flag, right? This is
Yeah. Mike put that up.
and it is, there you go. And we're about to break it. So does not look bullish in any way. So enough about silver. Let's look at, well, gold is also breaking. I mean, well, it depends where you take your fibs from. I think this was probably the most relevant starting point, but we are correcting gold as well, and nothing more to add. Same with platinum. The area I'm looking at is probably 1300 in platinum, but I'm taking my time. So, and this is another thing I would really, really urge people to always think about. Patience is so important. You have to be patient. You have to look at setups. You have to look at targets. And, I look at 15, 20 markets. I don't look at more than that to actively trade. And I have targets and theories about all of them. When something hits my target or, either entry or exit, I trade it. I don't try to kind of front run myself or, it's almost there. It's going to get, no. Have your target and stick to them. And if you miss a trade, if silver here goes to 50 and 55 and 60, okay, I missed it. It's okay. There are other trades to take. So patience for me is so important. I know it's a cliche, but it really is. So 10-year US again, I am well, by TLT, I'm still short this, and it's not really doing much. Really, it broke below and it's kind of consolidating again. Doesn't look bullish to me in any way, so I'm keeping this for now. I can't add anything more to last time I was here, so I'm gonna pass right through that. Oil is interesting because it has rallied obviously on these Russian sanctions, etc. But it's still, if you go far enough left, I mean, this is a huge area that we are below. So as long as we're below this, I am still bearish this. And the problem is that if we break below 55, it's just it's a trap door. Don't know where we go from there. I think in the medium term, oil should move higher and should find support. But for now, technicals are telling me, and fundamentals as well. With the global economy kind of stagnating, even though stock markets tell us the opposite, we can see that the global economy is stagnating, and you have layoffs everywhere, and GDP slowing, etc., etc. So I don't see any reason why I would want to be bullish oil. The only problem with oil is that, from what I'm hearing, the market positioning is quite short, and that I don't like. That's why I don't have a position in oil at the moment. If positioning was neutral, I would be short this, but I am not. Stocks, can't say anything about stocks. Still looking bullish. Even though the valuations are ridiculous, is gone. As long as the how do they say it? As long as the music is playing, you have to keep dancing. Well, the music's still playing. Sorry, let me close the door. There's lots of outside noise. Okay. But this AI craze is just ridiculous at the moment. It reminds me of the dot-com bubble. And when does that break? I don't know, but it will. So do I short this? No, because technicals tell me it's not bearish in any way. Would I be chasing that higher again? No. So I have unfortunately no position, and I'm really not much help on this, am I? And currencies, I still think the dollar is going to be bouncing further up, and you know, there are a few levels here. 100 is the obvious one, and then you go towards 102. I think between 100 and 102, we reconsider. I am bullish on dollar at the moment. Which pairs? I would avoid Norway and Mexico because I am inherently bullish Norway. So short, I would be short dollar Norway or euro Norway. So I would leave this one alone because it has broken below support, and MEX also is kind of trying to break below support, and also remember there is negative carry to be long this pair. But you know, I would favorite shorts in terms of being long dollar. My favorite pair would be the euro, probably. But let's see. And of course, if we do get any risk off, dollar gets bid, and this move really gets started. So we wait to see what equities are going to do, because equity is really annoying me. You know, they really should be moving lower, and they're not. And yeah, we wait.
There are a couple non-confirmations. For example, NVIDIA is still well off its 195 high.
Yeah, yeah, it's still
Um,
though very close. You know, it's still looking.
but
I don't.
normally it would be making new highs with the
Yeah,
semis, and the Mag 7 just now I think is close to making a new high.
yeah, and Tesla had a negative day. No, actually, what did they do yesterday? I can't remember. Actually, no, they were up. It was up. I thought it was down yesterday, but maybe rallied off the lows. Anyway, I mean, the markets are still looking very resilient. I don't know why, but hey, that's what the markets are doing. And with them go cryptos. So Bitcoin and Ethereum still, you know, going bid as stocks go bid, but again, they're underperforming. You know, S&P is at all-time highs, and Bitcoin is well below the 126-ish. So yeah, if you like cryptos, they are definitely correlated with stocks and then some. So pretty good risk proxy.
Yeah,
I don't have
Ethereum
anything.
looks better.
Ethereum looks better. Yeah, but it's moving a lot more
It didn't
violently.
break as much, you know.
Yeah, I
Anyway,
don't know, man. I don't trade cryptos. I look at them, but I don't trade them. So if you trade them, you're a much much braver man than I am. That's it. I don't have much else to say. I don't know who else is here. Blake
Ryan's
away,
here.
I know. Oh, Ryan, the bald guy. No, not him again.
So, hot kettle.
I'll pass it over to you then.
How are you, Ryan?
Yeah, I'm all good, mate. How are you?
Okay, so let's take a look at a few things. Tell me what you're thinking. What's the market expecting for the number?
Yep. We're expecting a rise in CPI to 3.1% from 2.9. The core coming in unchanged at 3.1%.
Okay.
So that's where we're looking. I think there might be a bit of a risk if it's a hot number. We see that core a bit higher than expected. We'll wait and see. Not sure how this number is going to drop, whether it's going to drop as normal, bang on the number, or whether there's going to be a bit of a mess coming because we don't know who's in the office actually releasing the number. So, yeah, it might be a little bit messy, this one.
Canada looking okay. I mean, it just had maybe one more shakeout to take these weak longs out, and now we're on the way.
Well, we could be on the way if this new fight between Trump and Carney's continues. That all kicked off last night. That's what gave us the lift back up. I'm actually eyeing this one as a CPI trade. If we get soft CPI data that sends that lower, I might either dip in that one. I certainly wouldn't look to sell or rally on the back of that.
Okay.
Because, yeah, I think if that fight carries on, this could be edging back up.
Any levels besides these highs in the end that we should be paying attention to? I think 52 is an important level for the bull case to continue.
Yep, 52 is absolutely my big number. 152. It's been a huge number on the way up. Well, going back when we had the massive rally as well, so that's really big. The next one above that is 155. That's another big one. But it's going to be interesting up here against that prior high. It could set up for a decent double top if we hit up there 153, 20, 25 and hold it again, because that was the high after all the Japanese election stuff that came in.
Okay. Well, you know, we haven't talked about this for a while. I know you traded the yuan, Ryan, and you know we have that deadline coming up for tariffs, the end of the month. If there's could be a meeting, whatever. I mean, it's only a week away. Should we be paying attention to China during this tariff back and forth with President Trump? And
yeah,
you know,
absolutely. Especially when we get these meetings and see if we get these meetings and see what comes of them.
you have a bias in this pair?
I have a bias if it all goes wrong. I think potentially they could let it strengthen. They've taken their fixes down a little bit. They're getting towards the low 7.9s now. So it's my bias would be down. I'm not going to short it though. I'm more inclined if they do let it go to see where they want to let it go to, and then jump in when they decide that's enough. But I've read one of our favourite propeller heads, Brad Stetzer, or Setzer, however you want to say it. He did a bit of analysis, looking like they might have been intervening in this one, buying dollars, so keeping it from strengthening too much. But they've definitely got a very, very tight leash on it. But it all depends on whether they let it go or not.
Okay, well, it looks like it's been trading exactly opposite of S&Ps. It peaked in April when the market bottomed, and it's been going down. I think some people also said with it going down, it's supportive of gold, that it was also something people watched that supported the gold rally with the yuan coming down. Is that true? If so, can you explain why?
I don't know. I don't know if they're buyers of gold. You think they'd want dollars then?
Yes, it's
Which
okay.
to buy them.
It's okay to not know. I don't know. I don't know. So
I mean, we know they've been buyers.
yeah,
Most definitely. So yeah, it just depends who they're buying it from and what they're buying it with.
I was looking at when Stel brought up the Noke, that this is like an incomplete pattern and looks like we should make a new low in Noke. You know, here's 1, 2, 3. This was a confirmed low. There was no divergence here on the daily. What would that imply? That there's going to be a pullback in the dollar, and it wouldn't take much of a little dollar softness to take Noke down to new lows?
Possibly, but then Noke's been gaining in the time. Oil's been gaining as well.
True.
We're seeing a little bit of a turnaround in there, so this could just be a little bit of a commodity move.
This could be a pullback to buy then, if you believe in the bottom in oil, right?
Yeah, I mean, if you get down and test that low, maybe not even get as far as that low and it bounces, then you've got a potential bottom in play. I'd probably draw a line off that low just in between June and July. Draw a horizontal in there.
June and July. You mean this one?
Yeah.
You want a horizontal or a trend line like
straight
that?
across. No, straight across.
Okay.
I'd go.
All right. Okay.
Because it will come in just around those lows over the October date you've got there, and then if that's the sort of area I'll be looking for support. because that'll be protecting that September low from that point.
So EG is trying, Ryan.
It's having a go.
Maybe they get it done this time. And is that a breakout buy for you, or are you going to watch it to see if it's just a stop hunt? How do you handle this?
Yeah, I can't call this a breakout. It would be a breakout if we take out the 50, 55 highs.
Yeah, that's what I mean. If we get a break, that would be a breakout. That's a buy signal for you.
Yeah, that'd be something I look at. But
Okay.
probably one I'd wait for a confirmation retest rather than going with the initial break.
Okay.
So, you know, if it breaks through there, goes to, I don't know, 87, 70, 80, and then pulls back to the break point. If it holds that, then that'll be my signal to add to my longs.
Okay. All right. So I think we've covered a lot here on the board. Who else is here with us? Steve, you have any comments before the CPI? Calling Steve Volge.
No, if he's not there. I mean, stocks are looking interesting. S&P's looking interesting.
All right,
not really, Dale. I'm of course focused on the metals, as you understand.
Yeah.
And you know, the extension of the reaction in the metals.
Okay.
That's all I'm looking at.
Do you think we're going lower? I said I think we're going lower.
Yeah, I think so.
Yeah.
I think that for the time being, we have to keep looking lower.
Yeah.
I still think we got to rally back to 4,200 or better first.
Yeah, it's not impossible, obviously.
Yeah. So maybe it's we got to, you know, the bar is pretty high for the CPI number, isn't it, guys? 3.1, 3.2. Maybe we, you know, it's weaker than that. The market would celebrate that, wouldn't it? If it came in more benign.
Of course.
Yeah.
Because they're not looking for a benign number. I mean, 3.1 is not benign, is it? It's kind of hot.
Core 3.1 is unchanged.
Imagine if you knew the real number.
Yeah, so you're right, but
my checking account does.
I know it does.
The problem is that the market's pricing, what is it, 3 cuts now from the Fed,
Yeah.
and the market needs to see CPI going lower, at least not going higher. So I think the risk for market movement is for CPI to be higher than expected. So if we get 3.0 in core CPI, we'll get a little move. If we get 3.2, we get a big move. That's what I think is going to happen. It's asymmetric at the moment, simply because the market just expects this or requires 3 cuts to come. And if inflation is not going down, it's going to be a lot harder for Powell, even with unemployment rising. It's going to be a lot harder for him to cut aggressively. So let's see what happens. It's going to be an interesting one. And the problem is, you know, the data we get, we can't be too optimistic about it being, I don't want to say correct, but reliable, let's say. So, you know, as long as the shutdown continues.
Well, who gathered the information during the shutdown to release a report like this?
It was already compiled. Because remember, this is September data.
Okay, got it, buddy.
So
they usually do it in the first couple of weeks. That's why there won't be October data, because there's been no one there compiling the data.
So there won't be a 19-year-old intern.
So 1 month that we can definitely be certain we're not going to have fake data.
I want to pose this question to all of you guys. You know how they say that the bond guys are the ones that are usually right, and the stock guys aren't as sophisticated as the bond guys, and they're usually early, but they usually get things right. Is this bond market rally people putting on a recession trade?
You can't have a recession trade with stocks at all-time highs. That's a problem. But yeah, the bond market is telling us something very different.
Well, that's what I mean. Who do you think is right?
I think the bond market's almost always right.
Do you believe in that, Steve? They say the bond guys usually get it right.
Oh, there's no
Although
question
it's
about
early.
it.
Yeah. So, I mean, this is people coming out of equities and locking in yield and not actually taking duration risk and making money doing it now. I mean, we're not at the um, target is up here from this ascending triangle, but I mean, let's even take a longer view. You know, we could rally to 100. You know, we've been there before. There could be plenty left in this. It's a hell of a base, right?
Oh yeah.
So we're start trying to come out of it. I think over 93, you got to say we're coming out of it, and that would take it to here. So I think that the what the averages are saying, um, it's a concentration. Someone said, "What's that geometric stock index that people pay attention to?" Um, that hasn't made new highs for a couple of years.
Don't know that one. But you know what?
Anyone know?
Hold on.
Anyone know in the peanut gallery? We have flash PNIs. Okay.
Well, one thing I do know is that imagine if things start going south in terms of risk off and everything starts looking bad and
Maybe
recession
it's
comes,
value line.
value line.
Maybe it's value. It hasn't made new, and it's basically it's a look at the whole market. Okay, that hasn't been making new all-time highs. CAD yen, Fred Field. What do you think about that, Ryan? What about CAD yen on a weak CPI? That's it. All right. Thank you, Timothy. All right. The value line, we don't have much time. Maybe we could look
Yeah,
at it
CAD
next
yen,
week.
not something I'm watching.
Okay. Is that true, Timothy? It hasn't made new all-time highs for a few years. Are you looking at the chart? We have a very smart community. We have knowledgeable people in here.
Hey guys,
All
I
right.
just want to
Well,
say TGIF, and I made it back from Ninja Trader Live. Just want to jump over here and say hello and happy
oh,
Friday to everybody.
all right. Why don't you set up the screen for the CPI?
Oh, we'll do that. I will do that for you guys while you're talking. So here we
All
go.
right. All right. So value line geometric index. Um, you're watching HYG. Yeah, that's not close to new highs. Okay. Thank you, Timothy. All right, Blake. Good to have you back. I thought you
Hey,
left for
thanks.
another football game.
What's
I,
that?
I thought maybe you left town to
Oh
go
no,
catch
no,
another
no.
game.
I
You're
wish.
like you're like the a weekend student. You're the opposite of how college students are. A lot of college students would go home for the weekend. You go to college for the weekend.
Yeah, I tell you, watching the Ole Miss Oklahoma game is going to be a great game this weekend. Anyway,
All right.
hey, just real quick, I'm going to put yields over here to the right, S&P to the right here in the middle, and I'm going to put gold to the left. I think everybody wants to see what gold is doing, because gold's it looks so dangerous at these levels. Or
It
maybe
does.
I should.
It does.
How, it does, right? Right,
Yeah.
Stelios? It,
Silver
it it
too. We
does.
were talking about this in the beginning of the of phase.
Yeah, I just want to remind everybody, if we do take out these lows here, let me move that out of the way. If we take out the lows from yesterday, the completion level is just below that. So the double top completion, I should say. And so just in case it does break down, I don't know if I'd chase it lower. That's all I have to say about that. Let me grab the data flash off of Forex Analytix here. I'm gonna pull that over and then get ready for the data. So what's everybody thinking going into this? What are you guys thinking?
I personally said that if it's higher than expected, the reaction is going to be bigger than if it's lower than expected.
If it's hotter than expected?
Yeah, yeah.
Yeah, I don't disagree with you. And I also think about positioning, if going into month end, we got corporate month end. So and if you look at the dollar, it's got a little bit of momentum when you're talking like the Canadian and the dollar yen. And yeah, I agree with you. And everybody believes that we're gonna get two rate cuts no matter what anyway, right?
22nd now it's coming out.
Yeah. Oh, here we go. Wow, wow, wow. That is weak.
Benign.
That is
Benign.
weak. That is weak.
3% core, 3% headline. Okay.
It's
Yep.
mixed. The headline's gone up, the core's gone down.
Wow.
There go rates.
Yeah, I mean, so the dollar yen came off and gave me an opportunity to just pick up a little bit more dollar yen down here, which is good. So what are you guys thinking here? I mean, you saw gold rally, you got yields coming off. Euro spiked up to I just sold a little bit of euro at 43 actually. What do you guys think here?
I think it's a good
This is a
sale.
massive overreaction.
Yeah.
There's a little
That-
overreaction.
Yeah, I've picked up some dollar CAD.
Yeah, okay. Yeah, you know what? I'm probably going to join you here and on that trade too. Matter of fact, I will.
Okay,
Yeah.
so yeah, Timothy said that value line geometric all-time highs were made. Last one was 2021. It's a long time ago. Okay. So gold's rallying. Maybe we get that rally to 4,200 sometime next week. S&Ps are leaving a little wick, and Stelios's TLT is going to have a good day. So that's it.
Look
I
at,
have
I
an
mean,
interview. I forgot.
oh, who's here?
I'm so enthralled with the action. We have Arnaud here today. I
Oh,
believe
okay.
he's here. Oh, I don't see him here, but let's see. Because he
Now the
couldn't
dollar
make
is
it
right
yesterday.
into
Oh yeah,
support, by
he's
the
here.
way. This is huge, huge support for the dollar, just FYI. So Ryan, if Ryan's right and we get a bit of a reaction here, then and this is like an overreaction, then the dollar is going to be supported at these levels. So I'm with you. I'm with you here, Ryan.
Yeah, I'm keeping an eye on dollar yen. I might have another little nibble there as well.
Yeah,
Uh,
I just added to mine too. So, I sold euros when they're up in the 40s. I think we're going to trade right back into the, 20s again. So, yep. All
Yeah,
right.
it
Well,
went right to that breakdown at
yeah,
1650.
it did. Right to 1650. You're right. Yep.
Yeah.
And it's a key level that we've been focusing on. Actually, I think we wrote it down yesterday on the bias chart. 1650 yesterday. Yep, right there. You can see it. It's a big level, and it's hard to see us to get above that. So, well, is Arnaud here?
Yeah.
Did you bring him in? All right,
Yeah.
great. Hey, I want to thank everybody for being here today. Wish I could have been with you guys throughout the course of what you guys were talking about earlier. But I think looking at that dollar CAD, I know Ryan's really honed in on that. And me too. I mean, Trump's canceling all the talks with Canada, and I think that's going to weigh on the Canadian dollar. I picked up some, probably a worse price than Ryan did. I got limited out of my other position last night. I bought it back, on that dip, and I think the dollar CAD could be trading in the 140.50 level up here by the end of the session. So, good eye, Ryan and Dale. Have a great interview. And guys, thanks for all the coverage. And I want to make sure everybody remembers Spooky 30 for the trader funding program. If you guys want to get funded as a trader, you want instant funding, use the code Spooky 30. We have 30% off up until next week on any of our funding programs for Halloween. So there you go.
Don't be a pumpkin.
Don't be a
Try it.
pumpkin. That's right. That's right.
All right. You jack-o'-lantern, Blake. Anyway, thank you, team, for another good week, hard week of trying to make something out of nothing until today. And I think we're gonna start having a little bit more volatility. Brian depressed me yesterday when he said Euro vol was 6. So never sell a sleeping market, and maybe we get some more vol coming in. The end of the month is big. Next week's big. We have the Fed. We have tariffs. We have, of course, the west wing being torn down to match the east wing. Just kidding. But anyway, guys, remember, don't thank you, team. Steve, thanks for sharing today. Ryan, K-Man, you're not here. Thank you for your hard work. And Stel for making all these guest appearances. You're almost a regular again. And
Cheers, Dale.
with that being
Cheers,
said,
Dale.
don't just cheers, guys. Don't just count your pips, count your blessings. And now I'm going to bring Arnaud in because Arnaud's going to tell us whether or not the wave structure that he's looking at is saying anything about believe we made new highs in the S&Ps. Welcome back, Arnaud. Welcome back.
Thank you. Thank you, Dale. Thank you for having me.
Good to have you. So
Yes.
you want to share your screen and tell us what you're seeing here? My memory
Yep.
and what we talked about last time. I know you were in the 6,800 camp. Was that correct?
That's correct, right? This is, I just pulled it up. As you say, you're only as good as your last trade.
Yeah.
So this is from July 31st, and
Oh,
it says
nice.
I was looking for 6,800, and I think we got
Great
to
call.
67, 64, something like that.
Yeah.
So that was July, so that was not too bad. And then, of course, October 10 happened, and there was quite a steep drop. I think one of the steepest one-day drops we've seen since April.
Yeah.
Yeah, so in that sense, everything is intermediate to long-term still on track, which is always what I prefer to focus on. Let me quickly update this little chart for you because sometimes stock charts messes the numbers up a little bit. It's all there. It's like my tax return. All the numbers are there. Just not necessarily in the right order, right?
Yeah.
So anyway, so we're looking here for a fourth wave, a pullback here in green, and then to be followed by a final fifth wave before we would see a much larger pullback. So I'm counting the waves since the March 2020 low, the COVID low, as we call it, the COVID-19 low. And so far, I think everybody can see we've not done 5 waves up. And we must see essentially 5 waves up is such a large structure, as markets tend to trend longer term upwards in impulse fashions and correct in 3 waves down. So impulses are 5 waves. And we haven't seen it yet. So we have a 1 here in 2021, a 2 in 2022, and then all the way up now, we're in this wave of 3, which is subdividing in most likely in ABC. That means that we're dealing with a diagonal structure, to be more in detail, but it still means that we're now in a C wave before we see a larger pullback. And we are now in this target zone for this third wave. So it's becoming a little, of course, from an intermediate to long-term perspective, a little bit more hazardous for this fourth wave, which can be similar to 2022, which was not a fun year to be in. But we expect it to last a little bit longer, this rally, somewhere into, I would say, spring of next year. I have that as a, here it's called the Armstrong Pi turn date. And
That's interesting. I've interviewed Martin. So
okay,
I think the
interesting.
first time I've seen you use his pi dates.
Yeah, probably on the show. I've definitely used it for my premium members, and
Okay.
it's pretty accurate, I must say. So here I've dug in. This is nothing secret or proprietary. It's on his website. He shared it with the world. I mean, it's fantastic
Yeah, he does
what he
that.
does.
Yeah.
And as you can see here, we have overlap of several. So he looks at the full turn date, halves, the quarters of that. And as you can see, 2021, we had a lot of turn dates.
Yeah.
Here in 2025, again, just right on top here before the April decline. Almost here in 2020, again here, etc. You can see for yourself, it's been working really well. Some pullbacks are bigger than others. But in general, it means a top, not a bottom, but a top. All these ones are top indicators. This is maybe
And
one
when's the
that
next
misses
one? Next one is due when?
is due somewhere around March, April, I believe, next year, somewhere
I'm
around
hearing a
there.
lot of that. Yeah.
Yeah.
He also is his war cycle's peaking. He thinks that
Yep.
there's going to be a war with Russia.
Oh, I hope not.
The Europeans want a war. And you know what he said? I watched an interview, and I've never heard him say anything like this before. Before he said that he has a couple of months of food and water
Oh,
stashed. He's
okay.
pretty nervous about
That's
what's
nervous.
coming up.
Yeah. Hmm. Well, I do have my own little personal reserve, but that's just, since we're here in California, we have, of course, earthquakes and the likes,
Oh
and
yeah, right.
a very fragile electricity net that doesn't work when it starts raining. So I have a
Yeah.
backup generator. Why? Because our electricity net is like a third world country, honestly. And I do have, of course, some emergency just in case. So I agree, it's not a bad idea. I don't have it for war. I'm not that pessimistic. I hope not. And
Okay.
so far,
Yeah.
our president is doing a good job, I think, in trying to extinguish most wars. But it's definitely been unsuccessful, of course, with the Ukraine-Russia uh,
Okay.
intervention.
So
But anyway, moving
how
on.
deep for this little four that we're gonna get?
Yeah,
Could
so
we
we're
get to
reaching.
6,100 prior
No, I don't
record highs?
think so. So
Not
fourth
that
waves
deep.
are quite unpredictable flubber waves. Let's see if there I call them. So I was looking for ideally somewhere around 6,400,
Okay.
plus or minus 100. I think so far we got to 6,550, right? So it's
Yeah.
always approximation. It's not that it has to be that exact number, and we haven't really gotten it. We got pretty much only the October low, and that's it. So this is the big bar in October. I've been tracking it as a bounce because normally corrections move in three waves. If we go a little bit to the left side here of the screen,
Yeah.
you can see here that big rally we had in April, and
Yeah.
then we had A, B, C lower for three waves, and they took a couple of days, and then of course the market took off and never looked back. And
Never
it's
looked
kind
back.
of like a similar depth I was looking for. Oftentimes in the Elliott wave, wave 4 equals wave 2. Doesn't have to be the case, but it's a rule of thumb you're going for. And we also, in general, apply a 38 to 32.3 of whatever percentage retracement of this wave 3 here in green.
Okay.
And you
So
can already. Hmm?
four equaling two comes in lower than 6,400. It
Yeah,
comes
then you're
in.
looking at about 63.80. That would be
Okay.
picture perfect. That
I
would be
see.
fantastic. It doesn't have to
Okay.
be. Fourth waves can be also something of maybe to 6,600, and it just stays flat because what all the market needs to do is get rid of its overbought conditions, right? It's froth. And
Mhm.
that can be done in time or in price. You either get a steep correction and everybody,
Right.
jumps ship, or it just doesn't go anywhere. And people also pretty much lose hope. They think the market is topping out and it's just basing. It's going sideways. Got rid of everybody's euphoria. Got rid of the technical overbought conditions, the internal overbought conditions, etc. And then it can move higher. And so we've been tracking this as an ABC. It can still be an ABC, but it's getting a little bit long in the tooth. The B waves can be extremely tricky. That's the problem. Fourth
You
waves
could
are
have
tricky.
you could have an irregular B that makes a new high, like we're doing
Exactly.
now, right?
Yes, so it's still possible. I still see the futures are doing well on the CPI. So it looks like we're going to go to new all-time highs. So then, of course, you go, okay, how are we going to interpret the current price action? So let's go back here. So this is the newsletter from October 10. So if you sign up for our services, you get a newsletter every day. About the indexes, cryptocurrencies, gold, etc., trade alerts, and every page covers a subject like the S&P 500 or the Nasdaq 100, so this was on that Friday, and we were looking for a drop to about 65.50, and I think that's what we got. That was all that we got,
Yeah.
and then we would see a bounce to about 6,700, and then another drop, and then another rally to about. We were looking for about 6,700, somewhere around there, and then
Yeah.
another drop. And so the first part of last week went pretty well, right? So we got eventually here to about 67.24. And so our forecast was, I believe, for 67.25. And then the market started to decline. So you think like, oh, well, it looks like this B wave that we see here in gray had already topped, right? So we said, okay, we're going to rally, we're going to drop, we're going to rally. We got 3 out of 3 correct. So short term doing pretty well. Short term is, of course, always the least certain. The market has, I think, on average, a chance of 53% of being green for the next day. So, it's almost a coin toss to know what the market is going to do tomorrow. You have 53% chance of it being green. Well, it has to be, of course, 53% chance because in the long term, the markets move higher. And then it started to do other things that I kind of lost. Like, what is it trying to do? You go like, okay, it did exactly what we thought. Rally, drop, rally. And then it started to decline, but the decline was in 3 waves. And then, this B wave is going to subdivide. And then it rallied almost all the way back here to this.
Let me ask you honestly, what were you thinking on that Friday when we closed with those big red candles? To me, that wasn't a buy signal on a sharp decline on a Friday afternoon.
No, for me as well, this was the start of this green wave 4, and then it was just a matter of, we knew it would happen, right? I said 6,800 and somewhere around there. So we were constantly in late September, early October, tracking the completion of this rally.
But
So we knew
I want to know what
it
you
was
were
coming.
thinking. I want to know what you were thinking on that close going home Friday. Boy, what a great buy right here. Were you thinking that?
Yes, for sure. I actually
Okay,
wrote that. That's what I did. I wrote that in my update. I sent it out to my members, and I can show
good for
you
you.
on Monday. I said, I hope you bought.
Okay,
I did, and so the first 3 days of last week were great, and then things, you can only look around 2 corners at once, especially with the stock market. Although probabilities, right, we
right.
can't foresee everything, every single move. So this is where we are. Are we now starting to top out here, or are we going to continue? And has the correction potentially already completed? Let me zoom out a little bit here, because I have some bar on my screen there. Again, this was an update from the 15th, and they said, so we got pretty much everything correct. We said we're going to see a rally at 66, 68, yada yada yada. So far so good, right? But then we were trying to look for lower prices, and every single time it seems like that the bears had their chance.
Yeah,
They just missed it completely. You were like, okay, now you have the perfect setup, right? As we saw it here last Wednesday. Okay, we've topped out. We've done 3 waves because B waves are 3 waves. We're going to now move lower. Would be picture perfect. And then every single time we had pretty much a bearish engulfing candle on the daily chart, which is bearish. It
yeah, you
turned
had
out
to
to be
buy it.
bullish. Yeah, you have to
Yeah,
buy it. You go,
really ironic.
yeah.
Yeah,
So that's been quite tough. So now we might be looking for a new rally, and that the 4th wave has already bottomed after just a 2-day decline or 3-day decline. That we had the decline, a bounce, another decline, pretty much to the same level here on October 14th. So you had your October 10, you had your October 13, and then October 14, and that's it. And that we're now moving higher in a bit sloppy fashion as a diagonal into the high 6,000s, potentially to that 7,200 level quite quickly. And this will be wrong, of course, if we start dropping below certain key levels. We always apply warning levels for the bears and the bulls. If it's an uptrend for the bulls, of course, and the warning levels will be raised, meaning if the price starts to drop below these warning levels, it increases the chances that uptrend is over, right?
is
So
that your invalidation level that you have there at the
yeah,
bottom of
yeah.
2?
Yeah, that's at around 65, 95, somewhere around there at
Yeah.
its wave 2 level. Because if this is a new impulse higher, we cannot go below the start of it pretty much, which is the wave 2 in this
Right.
case. So that's at around 65, 93, 99 to be exact. That's the invalidation level. But again, you get already earlier warning levels, right? The market gives you already earlier warning levels that you then can take into consideration for your positioning. But wanted to show this. Yes, we could forecast pretty well after the drop what would happen over the next 3 days, and then then you start encountering the uncertainty in the markets on the short term. As I always say, people a lot of people want to have that short-term updates all the time on the short-term, knowing the short-term, but it's actually quite uncertain. It's better to just move out, zoom out, and look at these bigger turn dates, look at the overall general bigger picture trend, to see the forest through the trees. You actually get less certainty with more and more granular charts. If you would zoom in here to less than an hour, you get so many squiggles. And since this is still an interpretive art, you're going to over-interpret all these squiggles. So zoom out and see the forest for the trees. Know that this is still a correction within a longer bull market that we still think it's going to reach probably 8,000. So that's really what we're looking for in the bigger picture, but not until most likely 2028. And it matches, in a trend perspective, it matches. You can see how this market is, literally playing ping pong with these trend lines, and that's I think what we can look forward to in the future as well. So that's where we're at. So let's see how this is going to develop every single time. Like this was on Wednesday. It looked really good here. You were like, we have a nice setup here for this B wave top. On Wednesday,
Yeah.
the market declined really nicely, and look on Thursday, right? And it was every single time. So on Wednesday, I was like, okay, this is a fantastic, good setup for the bears to hit those lower levels, maybe only as low as 65, 85. We didn't even get it, right? The Wednesday's low, that was all we got. So now we have to wonder, okay, what is going on? And zoom out again and see the forest for the trees and continue to focus on higher levels. And I think also from that perspective, so shorts and all that stuff do not really have a place yet in this market because it's in general a bull market. So we'll always be very cautious with counter trading. So it could be possible that we're now in this uptrend. I mean, the short term is still very messy. That's not ideal. But, that's what we're dealt with. So that's what we have to analyze. And that's, of course, unfortunate, but it is what it is. So, another indicator we look at here is the AD line, the cumulative AD line. And once it starts breaking out above trend lines, so we had some negative divergence going on here in September, meaning that the market was rallying, but the underlying market strength, market breadth was declining. And it has now broken above that trend line, which is often an indication that the downtrend is over. Similar here in April, we had also here, of course, very big negative divergence between December and February. The market moved higher, but the AD line moved lower, and eventually it started breaking out, and then it made a new all-time high. And every time that happens, it's a kind of like a go long signal. It's a very reliable trade signal, and every single time we're going to make a new all-time high, every single bear market prediction is relegated to the history books. Because we need trash can. We need long-term negative divergence to get a bear market, just like we had this 2 months of negative divergence in the AD line to get the March-April correction, which was quite steep, but a wonderful buying opportunity. Yep. And eventually then you get these breakouts above certain trend lines. And those are very good signals also to add further to one's position sizing with, of course, always the appropriate risk management.
You want to share a gold look?
Sure. Yeah. So before I get there, we're a few more technical indicators on market breadth we're looking for. Market is actually pretty oversold. So as you can see here, it's quite low. So it has a lot of room to rally. And that's what it's been doing. So let's move the chart a little bit forward. So it has a lot of room to rally. Anyway, let's move on to gold. So we believe gold has most likely topped for a larger third wave and should know about in a deeper fourth wave, probably somewhere around 3,600 plus minus 100 before it's going to do a last rally. And last couple of weeks definitely surprised us in the sense of that we were looking for around 3,800 top on a simple symmetry breakout. And gold certainly surprised us and rallied all the way to, 43.81. But those are just initial targets. But we believe that this is the third wave, and it's going to top out. It probably has already topped out,
Yeah.
and we're in a correction before the final like higher. I mean, the technical indicators are of course pretty overbought, so any pullback is quite normal again to take care of those very overbought conditions, and we're going to go into a larger fourth wave. But 4 is always followed by 5, and we're
That's
not
right.
done yet.
Okay.
Same here. I think we believe for the gold miners. Let's see here. This is GDX. We believe that has stopped for a third wave, a fourth wave, and then a fifth wave. It could do still a couple of more, but yeah. Also, this one is extremely extended to the upside, and needs a little breather, and that's what we're currently going through. And then we should see a little bit more upside, potentially, of course, setting up negative divergences on the technical indicators that you're going to track. But yeah, so as you can see here, this third wave topped right at the 161.8% extension. We got a high here at about 85.08, and 161.8 is at 85.25. So I mean, that's pretty darn top.
Yeah, nice, very nice.
So we expect it to correct for a while before moving higher again. Yeah.
Okay, Arno, you're a very, very excellent technician.
Thank you.
And tactician too. So, how do people get involved with you?
Several ways. You can go to our website. It's intelligentinvesting.market. It will explain everything to you on what we do and what is included. So we have, as I just showed you, a daily newsletter, and it contains everything. You just get everything, and you get exposed to everything, even if you're just only looking for maybe an S&P 500 update. It's always there, and you get exposure to everything else. It has our trade alerts for the ETFs that track all the indexes. We have Magnificent 7, of course, the stocks trade alerts. We have crypto trade alerts. Those are our proprietary trade algorithms, which do pretty well, if I must say. And of course, you know, there's some losing trades. Netflix we lost on. My system went long 2 days before the earnings, and of course got hammered. Other times it goes great, but that's just trading. So you get your whole overview of the markets. Pretty much everything is from the short term to the long term included. It's $99 per month for 50% off for the first month. And I know a lot of people like it. They really want to get this holistic approach, this complete approach to the markets. They want to be informed about everything, and that's the way to go. And you can also follow us, of course, on at Intel_invest on X. That's where we mostly post our work. Some of it, not everything. Sometimes we post a little more during the week, sometimes a little less. It depends on, you know, just on how much time we have on our hands to do it. But it always gives you kind of a little bit of a flavor of what we do. So yeah, unfortunately, our last post was here October 16, where we showed, you know, hey, we got all these turns correct, and so hopefully we stay correct. Which I literally wrote in our update. Right? Hopefully, our winning streak is not about to end, as we must acknowledge that B waves can become protracted, and we cannot be right all the time. And that's exactly what it was. So this was on the 15th, and here we are a week later, and it became protracted, and we were not able to foresee the further squiggles that we got, the quite erratic days with, you know, up days followed by down days followed by up days, quite erratic. You know, like in an uptrend, it's quite steady. This has been quite erratic, but it is what it is. So there you have it. So that's the ways people can get exposed. Thank you to our work.
Good job on the 6,800 from last time, and you know, we have some live analysis with what the market's doing today, and appreciate you coming here every quarter.
Yeah, you're welcome. Thank you for having me. I appreciate you want me still on your show. That's
awesome. How long have we been talking now?
Ooh, soon, almost 10 years.
Oh my gosh, yeah.
Right? Somewhere since 2018 or something, 17, 18.
Yeah. Well, it's your content. And appreciate you coming here every quarter and sharing it with us.
Yeah, you're welcome. And I hope people find it useful. Even what we just showed, that is useful for them. I know, for example, a member of mine said, I just said it's peace of mind for him more of a long-term trader, investor, peace of mind for him to know that, okay, this bull market is still going to go
Right.
on, and I can look at the warning levels, and hey, everything is still above the warning levels, and it's maybe I only need to check in once a week, something like that, or once a month, but it gives me peace of mind knowing I'm still on the right side of the trade. I can go back to bed. I don't have to worry, and that's
Great
you know,
example.
a
That's a
great,
good
yeah.
That's a good testimonial.
Thank you.
Appreciate that, and I think I'll sleep pretty good tonight too.
Yeah, we should. We
All
should.
right,
It's
all
not the
right,
end of the
Arno.
world.
All
Even
right.
without the East Wing, it's not the end of the world.
Oh yeah, yeah. We'll see what happens with the other wing. It can't
Right.
fly. You know, the White House can't fly anymore because it's missing a wing.
Yeah,
Uh,
that's been clipped. Yeah.
uh, anyway, thank you, my trading warrior brother. Appreciate it.
You're
Our
welcome.
note,
Thank you, Dale.
our notes are sure. Look him up on X at Intel_invest and check out his work. And that's a wrap for me, everyone. Hope you had a decent week, regardless of your P&L. Have a great weekend. And remember, don't just count your pips, count your blessings. Adios.